Well, good afternoon, everybody, and welcome to our Tuesday afternoon oncoming thunderstorm session here of Bull Sessions, September 21st, 2021. A hearty shout out to everybody who is out there weathering this tsunami from China and 1,000-point drops in the market and all that kind of stuff. But we'll cover a little bit of that stuff and maybe go in some little less traditional places. My name is Mark Robertson. I am joined here by Ken Kavula and Kim Butcher. Say hello, guys.
Hello, everybody. Glad to be with you.
Hi, everybody. It's raining here, too.
It must be raining everywhere. Well, Ken and Kim will be watching for any questions or comments that you can add. We do encourage participation. We try to keep this informal. We're going to hit a few topics. We actually ended up in some unintended places here today, so that can be kind of fun. The tennis racket that you see on the left is in honor of the recent U.S. Open, and it's actually a nod to the September stock market. And for those that didn't see it, both Sabalenka, who was in the semifinals for the ladies, and Novak Djokovic destroyed rackets while they were playing on the court out of sheer frustration. And I think that pretty much captures the September market for a lot of people. Those of us around here know that just means it's time to find something that deserves to be studied and bought and owned. But that's the whole, that's my tribute to September stock markets, Sabalenka's formerly useful tennis racket.
I noticed the Red Rabbit has begun to stalk the bulls here in our graphic, Mark.
Yeah, continuing to multiply too, moving around the screen a little bit there. All right, and we're also going to take a look at the world of pharma, thanks to a contribution from Scott Rupp. He's here in our audience here today that showed us a little bit about visual capitalists, so we'll visit that. Over the next several weeks, we are going to be going over the sources of best small companies. I think it's a wealthy field of opportunity right now. It seems to be getting even better with each passing day. Today we'll spend a little extra time with the SSG Plus at Better Investing and ferreting out some small company opportunities in there. Actually led us to a company which I kind of dissed on Saturday morning in the Cleveland presentation, and as I dug into it a little bit deeper, it's a pretty cool company. So we're going to take a look at that as we go. All right. Here's our standard disclaimer. No investment recommendation is intended. This is all about the demonstration of a philosophy, method, technique, basically honoring the over 8 decades of experience with the modern investment club movement. The way we study stocks, share ideas, build portfolios, and take care of them is what this is all about. So we're going to share some opinions about that, lessons learned, things that we think we can be looking for. And but please, please, please do your own homework before actually making an investment decision. Every once in a while, we own some of the companies we talk about. We try to disclose that. The final Tuesday of every month, we have a webcast, which has been running for over 11 years. The rate of return on the selections made is hovering between 19 or 20% annualized. So we try to share 4 or 5 ideas every month. It's called the Roundtable. And we basically walk through the analysis and the story behind a number of investable, actionable opportunities. If you'd like to be added to a reminder list for that event and other educational sessions that we do, send an email to nkabula1@comcast.net. If you'd like to follow up with questions or suggestions for future topics at these sessions or any other sessions, please send an email to markr@manifestinvesting.com as shown there. That includes a request for copies of the slides. So we're going to continue down this path.
Mark, I want to add one thing, Mark, sure, to what you just said about Natalie's email there. We've been getting some emails from folks that want to register for the COVID cancellation conference in November. Those materials will not be ready to be distributed and for registration until sometime around mid-October. So if you are sending an email to my wife asking for those materials, they're just not ready yet. If you don't think you're on the reminder list, you can send her an email and ask her to double check to make sure that you're on the reminder list. How do you know if you are or not? Well, if you're getting a once a month email from the Mid-Michigan chapter, then you are on our reminder list. If you can't recall getting one at all, send Natalie an email and she'll check. And if you're not, she'll add you.
Okay, thanks, Ken. And we'll have more information on that towards the end of the program. Here is our basically standing wish list of topics. We are going to be spending now between now and Halloween with some other topics thrown in, but a fairly extreme concentration on chasing down 20 really good best small company opportunities, basically following that challenge process, which we'll demonstrate here today. And we're going to be looking at a number of our favorite sources. Any comments or other questions that you'd like to add to this, Ken?
Only that we've backed off of the 20 number, and we're not inclined to be real rigid about that. If we find 22, then we'll show you 22 good ones. We're going to try to hit 20, and then if we go a little bit past that, we're not going to obsess about it. Right, Mark?
That's right. We are flexible. All right. For our graphic this week, I'm actually going to extend and share something that was sent to me by Scott Rupp, one of our subscribers. And this is from the Visual Capitalist. You'll see that logo here in a second. And you can actually sign up for this site, and you end up with some pretty interesting things. I'm sure we'll be looking at probably one of these a month. And this is just simply a really neat way to get visual. And as you know, at Manifest and at Better Investing, we believe a lot in the visual analysis, this notion of imagining a situation, studying a business model, as we'll see in a few minutes here. So visual is important to us. And this is just kind of a cool look at the global pharmaceutical industry. So let's go ahead and take a quick look. North America, I guess I knew this sort of, but now I really know it, I guess. North America accounts for about half of the global pharmaceutical market in the world. And does that surprise you, Ken?
Not at all, Mark. I actually, in fact, I thought it might be a little bit larger than that. I really think that an awful lot of the innovation in the pharmaceutical market comes from North America. So I'm not at all surprised to hear that it's more than half. Not at all.
Okay, well, we're obviously a much smaller slice than half. We apparently like to take pills and feel better and live longer and all that kind of good stuff. And there's some wonderful companies. Many of these are in many of our portfolios. We consider these to be a core component in many of our portfolios, with Johnson & Johnson being the number one company there. And you see the 6 of the top 10. You see Lilly, Pfizer. By the way, Hugh McManus owns all of these. AbbVie, Bristol Myers Squibb. You can see even Biogen down there. I see Merck up at the top, Amgen, which has been in many of our portfolios for decades. Notice that Regeneron creeping up there on the right over here. And
Moderna up there on the left-hand side of the circle also, Mark. Pretty good size.
I was going to find Moderna. Oh, over here.
Yep.
Moderna. So again, you
As
can...
a healthcare worker, I think I would also say that in the United States, we pay more money for healthcare and for our drugs than anywhere else in the world. So we're much more capitalistic about making charges for drugs higher.
Yeah, and I would argue that many people are critical and pick on big pharma. In fact, I watched a movie just the other day where the pharma company was the evil, nefarious villain of the movie. And I think a lot of the research that's done in the United States, and Hugh would certainly back this up, has underwritten very effective cures and treatments globally. And I think that's very true. I do notice that Walgreens and CVS made this, which is kind of a misnomer, but they obviously are in the business of helping get those things to us also. So there's some fairly big names, some of the smaller names on here too. I've never done an SSG on, is that Editas? That's the smallest one. Where did I see Editas on here? Down here at the very bottom. Might be interesting to just take a look at that one just to see. It's the smallest one on here. Just see what that looks like.
Oh, I think there's a smaller one, Mark. Look between Walgreens and Pfizer. That dot looks smaller.
Yeah, and that is Dicerna. Does that ring a bell with you?
No.
So Dicerna. Maybe we will take a look at those and see if they have any potential going forward. All right. Here's Europe. Same situation. Largest company is one of the longest community members of the roundtable tracking portfolio. Roche, I picked it over 10 years ago, and it is still in the tracking portfolio, but you see some other household names. Sanofi, we did a presentation with Sanofi several years ago on the vaccine side of things. AstraZeneca, there's some really good companies on here. Novo Nordisk in the diabetes side of things. Novartis, kind of a European Johnson & Johnson is kind of the way I think of them. Anything jump off the page here, Ken?
Oh, there's a whole European arm of Merck. I'm noticing right underneath the Roche figure there. And I know that there's significant partnerships between some of these European companies and some of the American companies. BioNTech, for example, is in partnership with Pfizer for the vaccines that we're getting right now for COVID. So I think that Europe and the United States in their drugs distribution and in the research is intertwined a little bit, maybe more than a little bit, when you take a look at some of the companies.
Yeah, and I had trouble picking out Jazz. Jazz should be somewhere in the Ireland group, and I don't recognize it as a logo or anything. And here's that company they acquired, which is causing some of the heartburn in the stock price here of late. But again, some interesting studies and just an interesting way to visualize it. And then last but not least, Asia and what they're calling Oceania. And this is actually a pretty interesting study. If you dig into CSL, that's an Australian company that has an interesting looking SSG. Stock selection guide, good stock study, and could be worth some consideration. China and Japan obviously dominate the rest of that light blue bubble. Takeda in Japan, and a company I had never heard of before. Maybe I just don't get out much. This Jiangsu Hengrui. And I have no idea if I pronounced that properly, but think cancer, think China. And kind of an interesting concept anyhow. And it's kind of interesting that we would be talking about this with the Chinese stock market closed and our stock market reacting rather adversely to it yesterday. But it's an interesting situation. One of the things we thought we would demonstrate with this one is just a little more detail on this company I'd never heard of before. Again, largest pharmaceutical company in China, and it's not traded on the U.S. exchanges. So this is the ticker symbol on the Shanghai Exchange. I have never directly bought a stock on the Shanghai Exchange. Perhaps somebody out there has, but that could be an adventure all by itself. But I do find it interesting that this company did not just fall off the turnip truck. It's several years old. What I do find interesting is with all that's going on in China right now, the stock price has been cut more than in half. It'll be interesting to see what happens to it on Wednesday morning when the Chinese market finally does open, to see if further pain is inflicted. But kind of an interesting company. And again, with that much of a drop in price, coming back to more normal PE ratios, who knows? And here's just a little more background on what that stock price drop looks like, and a little more information on the company. And it really does deal with healthcare innovation, and they are working on a whole bunch of stuff. They have a very extensive pipeline from the common cold to China, to cancer, excuse me. But just kind of interesting. It was featured not that long ago in Barron's back in March as is an interesting look. And the only reason we bring this to you and present it in this fashion is every once in a while you find one of these and you throw it on a guide or a stock study, and up, straight, and parallel kind of explodes off the page. Now, Ken, go ahead. What's your first thought when you see something this up, straight, and parallel?
My first thought is pulled pork and the pork producing company that we investigated onwards of a dozen or more years ago. We also had some Chinese medicine companies that were peddling traditional Chinese medicine and had beautiful visual analysis. We were later to find out that the numbers couldn't be trusted. And in the case of the pork company, they were all made up. They were just purely made up values, even down to the picture of their headquarters, that when it was investigated by folks that went to China, the building couldn't be found anywhere near the address that was given because it didn't exist near that address. It was just a random building that somebody had taken a picture of and slapped a name on. So I don't think that there's any sense of having to tell the truth to American investors when it comes to some of these Chinese companies. And therefore, I just think it needs a big caveat emptor sign plastered all over it, buyer beware, because I just don't think you know what you're getting sometimes when you're looking at beautiful graphs, just like these particular graphs.
Yeah, I'll even emphasize it. Every once in a while, these companies lie. They do not tell the truth, and it happens, and it's unbelievable. But a couple other caveats here. All the currency stuff, information on here is in Chinese currency, so some of those dollar signs shouldn't even be on there. That's just the automated program taking over. So if you're looking at this and you have this sudden nagging urge to commit 5 or 10% of your long-term retirement portfolio to this company because it's so up, straight, and parallel, what I want you to do is go back about a year ago. We featured a program over a couple of sessions called the China Hustle. And again, I think there is opportunity in China. This could be a decent opportunity. But man, it is a minefield. And we talked last week about how if you do go there, stick with some of the more visible companies. As Ken was just saying, even beyond that pulled pork company that has left a bad taste in his mouth, no pun intended, the China Hustle goes through and talks about this. I don't even remember what the product was, but in order to produce the amount of production that they would have been doing, somebody figured out that they would have had to have 40 or 50 semi-loads leaving that factory every day or every week. So they actually rented an apartment across the street, and they saw one truck come and go over the span of a couple of weeks. So, these things happen.
That documentary, The China Hustle, is still viewable on Prime Video. If you happen to be a Prime member from Amazon, you can search for it, call it up. It's called The China Hustle, and it's an intriguing documentary to watch. It's not the most engaging thing. It gets a little bit long in some sections, but there's always that key that allows you to move fast forward if you need to. But it does give you a lot of food for thought when it comes to Chinese companies.
Yeah, and it's not a friendly environment for investors, just to be aware of that. And what I will probably do is just try to figure out how and if I could place an order on the Shanghai Exchange for a company like this. But what I'll probably do is just make a theoretical investment and track it and see what would have happened if the price does take quite a dip tomorrow morning when the market opens.
Yeah, we're getting some irony from some of our audience. A good thing that never happens in the U.S., says Scott. And then Joe mentions Enron and a couple of other places. We're not saying it doesn't happen here, but at least I think that we have enough press and we have enough people kind of watching to bring it to the forefront. Maybe it won't come out as soon as it should come out, but I think it eventually will come out. We're also getting a lot of questions, Mark, about Abbott Labs. And Len asked those questions along with some other folks, and then Len answers it. Abbott is actually in the medical device industry. I think Abbott Labs drug section was spun off 4 or 5 years ago, and it's now called AbbVie.
That's correct.
That came from Abbott Labs. The AbbVie did. So the old Abbott Labs is still here, just under a different name as a spinoff.
All right. Any more Chinese dead horses? Again, we're not being I don't even know how to put it. We're not China shaming or anything like that. It's just a reality, and yes, we agree that there have been domestic incidents that rival it. So yeah, the rule of law is important. That's the difference.
Mark, we have Dennis asking you to make a note that you can also get great graphics similar to these kind of graphics from FinViz, FINVIZ.
Oh, definitely.
And I've been to that site a number of times, and Dennis, you're right. There are some absolutely wonderful graphics there if you're looking for specific types of things. Really, somebody does a really nice job at that agency as well.
Mm-hmm. All right, so let's go ahead and dig into our hunt for the best small companies for this coming Halloween. We'll be spending some time with a number of the images that you see on the screen here, including checking in on that Forbes effort to re-engage the effort that they abandoned 6 years ago. But our track record's pretty good doing this since then, and we continue to see a wealth of opportunity in some of these smaller companies, so that's what we're trying to discover again this year. Today we're going to take a closer look at SSG Plus from Better Investing. Here is the current tracking portfolio, or the working dashboard for the company. We'll be adding Educational Development Southern Missouri Bancorp to coverage here within a few days. And this is the list of companies. I've circled some of them that have a little bit of weakness that perhaps might be make them vulnerable to a challenge. We'd like to see a suitable amount of financial strength and EPS stability. We'd like to at least see an average or maybe perhaps slightly above average stability of earnings and consistency, but some of those companies are a little challenged in that area. So again, that's all part of quality. And as Ken has constantly reminded us, quality matters when it comes to these companies also. Go ahead, Ken.
Yeah, I should just make the point that this is coming from a screener, first of all, and that means that not all things that pop out of a screener are worthy of investment. It's just a starting point. But it's also a screener that's coming through the SSG Plus, which means that one of the things they do not screen for is potential annualized return. Mark has put these names onto a Medifast dashboard, which then gives you some par values, some annualized return values for these companies. But the screener just pops out things, and if you're looking at the screener and you see the predefined small company screen tab, all you have to do is go right to the right of it, and there's a small question mark there. And if you click that question mark, you'll see exactly what the 10 or 11 criteria are for the screen that you're coming up with. I'm not surprised, but I'm a little bit flabbergasted, Mark, by the number of regional banks that are coming up recently on this particular screen. This screen a month ago was giving me 7 or 8 ideas, and now it's bloomed with all these regional banks on here, so that I probably have 18 or 20 ideas to take a look at. Here's the criteria. Mark had put it up there. Here's the criteria that this is screening on, and you can find this on your SSG Plus tool as easily as we just did. You go to the SSG Plus with the spyglass icon on the left. You look at the predefined screens that are right in the middle there, and we're focusing basically on the yeah, hit the spyglass again, Mark. That it just took you off. There you go. And then we're looking at the small company predefined screen. I will tell you, you also get some interesting ideas off of the value predefined screen, but the companies aren't guaranteed to be of a certain size. So this one here guarantees small companies coming off as defined by Better Investing, and that means their revenues are between 100 million and 1 billion in sales. It's not talking about sales growth or earnings growth or anything like that. It's basically looking at between 100 million and a billion in total revenues. That's what they use for the definition of small company. It's one of the definitions that George Nicholson originally used, the value of the revenue, the amount of revenue, and he classified companies into 3 categories. Remember that he also used the definition of sales growth to define small, medium, and large, or what he called them was faster growing, slower growing, and regular kind of growing, medium growing. And those numbers were less than 7% sales growth was large, greater than 12% sales growth was small, and in between 7 and 12 was a medium-sized company from his point of view. The definition still works today. The definition of revenue needs updating every 5 or 6 years because of inflation. And so Mark and I have decided to maybe move our top end of revenue up to 1.4, 1.5 billion, somewhere in that neighborhood, maybe even approaching 2 billion because of inflation over the last 5 or 6 years. We've held it at 1 billion since we started doing the list, and that was 6 years ago.
Yeah, I guess the one thing I would point out, this is the output from the tool. So
right.
All small companies, and this sales growth, Ken and I looked it up as we came online. It really does refer to trailing 4 quarters or trailing year. So it would be vulnerable to the type of economic disruption that we've seen. So this number that you see here may not align, again, because of peaks and valleys and troughs and all that kind of stuff. It may not align very well with the long-term sales trend, which is basically what we screen on. But
exactly right. So
again, it's meant to be a source of ideas.
Yeah, use your head. That's all. And again, a lot of regional banks, an awful lot of regional banks.
Yeah, so I basically subjected them to our parade of opinions. These are in the same order as the previous slide. So this is the output from that graphic. And you can see these are the sales growth trend numbers. They're going to be generally lower, but some of them do make it into that double digit or greater than 12% that Ken was talking about. We would regard anything above 12% as a quote unquote, I'm doing air quotes, Ken, smaller, faster growing company. So anything above.
Well, and we have a couple of phenomenal numbers on this list right here. The Fudu number is I would want to look at the data for Fudu. I'd also want to look at the data for KNSL, the insurance, property, and casual number at 25% growth. It's believable, but at the same time, how long can it be sustained?
Yeah, a lot of times that's a merger or acquisition sneaking in there and kind of distorting the picture. So you got to, case by case it. Again, these are screening results. But what we're looking for, again, is here's the current list of companies that are in that top 20 best small companies. This company probably falls out on the current update. You can see that there's a little weakness there. They drop down below high 90s manifest ranking. So in order to make this list, you probably got to chime in at 97 or above. And kind of interesting to see that this screen has generated a handful of candidates for doing that. Again, capital markets, Futu, which is Futu's the name of the company. The market cap probably takes that out of what we're looking at. And then HLG is one of those education and training companies out of China. And kind of all bets are off there also. If you've been tracking new Oriental education for years, ticker symbol EDU, that is just cratered.
This is for-profit education in China, and that industry has been decimated in China, essentially outlawed.
Right. So, these numbers are, we have no idea how they're going to get to these. And this is a relatively small company, obviously. So we'll see. But we would set that aside. We would set this one aside based on market cap. Probably Monolithic Power, too, we would set aside, at least for now. Not just that, the bleak expectations for the next year is probably another strike against them at this point. And but there are a number of candidates here. That's STXB. Is that one you've ever looked at, Ken? That is Spirit of Texas.
Yes, I have looked at it. It doesn't look as good as some of the other banks on this particular list. I actually bought one of the banks on this list, Mark. I own IBCP, and I've owned it for quite a while now, for maybe 3 years. And I'm surprised to see it moving up the list so smartly here. This is Independent Bank Corp out of mid-Michigan, and I bought it just because I like to invest in things that are near to my home with part of my portfolio.
Investing in your backyard.
Yeah, it's moving right up into the realm of something. Maybe the investing community will discover it, and that'll help it even move further up. There are some great banks on this list. SMBC, Southern Missouri Bank, is one that I'm really taking a hard look at right now. And I don't know, did Granite Bank make this list, Mark? Am I just missing the ticker?
Granite did not make it for now.
It did not make the list. Okay.
And SMBC is already part of our 20, so they're already in the 20 for challenging.
It's a good one. I think on that 20 that we're looking at, we have the one at the bottom that we're definitely going to probably delete, but I think there's a couple others near the bottom there that are definitely challengeable.
Yep.
Definitely challengeable. So we'll take a hard look at some of them. It's surprising to see the variations in total return numbers in some of these different companies. It's amazing and a little bit suspect in my mind. You know that you're in the small companies. It seems that our data sources sometimes go a little bit wacky when it comes to giving us guidance.
A lot of times that can be the number of analysts covering too. We've talked about that in the past.
Yep.
The other one here that doesn't make the circle list, but it certainly makes worthy of study and awareness list, is this one here. It's a current holding in the roundtable tracking portfolio, but FFWN, that's it's Foundation Wealth. That's one that Ken has been pretty high on. I know he presented it at a roundtable.
Yeah, I presented it at a roundtable, and I still like it. I have found ones I like better, but I still like this bank as well.
Okay, so what I thought we would do is here's a couple down here that have kind of interesting characteristics. One I'd never heard of. Medifast I have heard of. I will confess I've never been able to understand what they're doing, and I still don't after looking at it closely, but that doesn't mean we can't dig in and look at it a little bit deeper. And this RPI.UN.TO, that's obviously a Canadian company, and it's actually the Richards Packaging Income Fund. And that's not what it is. It's Richards Glass. It's actually Richards Packaging out of Canada. So I was kind of stunned to see what's going on there. This has to be a clerical error on behalf of the rhinos covering the company, because that's not true. It's not 4 times the price that it should be. So what I thought we'd do is just take a look at them. And Ken, have you ever taken a look at this company? This
is completely new to me, Mark. Completely.
It's new to me too. Richards Packaging, again, it's Canadian, but a fairly decent trend. The way I would describe it after studying it for a few minutes, again, a cursory look, you may remember Aptar a few years ago as a packaging company that we featured at Better Investing, and they make all kinds of stuff like the bottles that ketchup goes into and different containers for
and different kinds of closures for containers as well, Mark.
That's correct. And I would almost put it in the ball jar type category too, with some of the containers that they make. But fairly interesting picture from where I sit, and it would be definitely worth taking a closer look. You can see some of I inserted this here from Y charts, so you can get a feel for what earnings expectations are for 2021 and 2022. And here is revenue. It's certainly on these lines that are depicted here. So I just find the company interesting. It's a company that goes all the way back to 1912 in Toronto, exclusive of glass to start out with, and they've expanded again, much like Aptar, into a bunch of consumer packaging. So kind of an interesting study, and one that
I wonder if they're the leading supplier of having things shipped, packing.
Could be. There's a lot of that type of content in their pictures. Again, going back over 100 years. Interesting stuff. Here's the second one. Here's Medifast, and of course I'm familiar with the company. I know a little bit about them, but just kind of having trouble making the picture add up a little bit. And if you take a closer look at their investor presentation, it doesn't answer a lot of questions. I can't explain. I went looking for a change in capital structure or a merger or acquisition, and that explosive amount of business showing up there. The analysts don't necessarily see it coming. If you start looking at some of these numbers over here, and they kind of show a flattening out, but I wrestled with it for a while, and I wasn't able to come to grips with. I would call it, kind of an entrenched version of Noom, the company that does, or maybe the way to think of it is a Peloton approach to helping people lose weight. They focus in on coaching and, better lifestyle choices and all that kind of stuff. I don't know. It's just kind of bizarre. The one thing that they did point out in their literature was they too have had to cancel 1 or 2 national conventions, and they basically deployed those resources into online stuff, and that actually is given credit for actually generating more business over the last year or so. So kind of bizarre.
I will make the point, Mark, that like a number of Canadian companies, you might have a difficult time actually purchasing this company if it's only trading on the Toronto Exchange and trading over the counter here in the United States. I found a very interesting small company called Enghouse Systems, and when I went to my broker to buy some of it, my broker is TD Ameritrade. When I went to the broker to buy some, they indicated that I couldn't, that I would have to pay a special fee and have them move through the Toronto Exchange to get the company. And I indicated that I thought it was being traded over the counter here in the United States, and they said they didn't deal with those types of stocks through their brokerage firm. So I don't know where this one's traded. I don't know if it's traded at all in the U.S., but if it's on the Toronto Exchange, you might have to jump through a few hoops if you want to buy any of it.
Yes, it's in the BI data, so it's been screened for some of that qualifying.
Right. Well, Enghouse is in the BI data also.
Okay.
And because the BI data includes all the Canadian companies besides the American companies, so I'm just indicating that just because our data is spitting it out doesn't necessarily mean that it's going to be something that you can just do a computer buy order from your broker. You might have to do a little bit of research and a little bit of talking to people if you really want it.
Okay. Here's a closer look at our tool with Medifast. Again, not easily understood as to what's actually going on that accounts for this relatively large step up in business. These are the analyst expectations for the current year and the next couple of years. And it's certainly an interesting story, but they don't go very deep into the story. And you can see here, this is from the value line. It's covered in the standard edition from a couple of months ago. So it'll be interesting to see what the next one looks like, because it has dropped from near 300 back down to around 200. And the only way I can make this thing add up for myself personally and this is my study now, most of the analysts following the company are talking about numbers like this. I'm looking at this picture right here, seeing high single-digit growth, and I can begin to make the numbers make some sense for me. Again, if the analysts are the estimates here, and again, it's a relatively small number of analysts, but fairly decent numbers across the board, and certainly worth studying. Notice that the profitability has steadily increased and plateaued around 10%. That's a good thing. The PE around 20 is certainly viable. So it's had an excursion up, a PE explosion back a couple of years ago, and has settled back. And I would be interested in seeing, what does this company look like from a management standpoint going forward? Because it's a pretty decent picture, better than Value Line perhaps paints.
Mark, when I took my dive into Medifast, I asked myself, the first question was to try to find out, did something materially change in the company in the 2016 fiscal year to allow it to suddenly begin growing earnings at a pretty healthy clip compared to the previous 5 years or so? And I could not find an event of any kind in that time period to warrant the explosion, in sudden earnings growth. And then you can see by the sales graph that the sales seem to take off the next year in 2017, and we get a whole different company pre-2017 and post-2017 as far as sales are concerned as well. So I could not find anything to account for that going on.
Yeah, and if anybody in the audience has done a deeper dive into the company and can elaborate, we'd certainly be interested in hearing that also.
Matt has his hand up in the air, Matt Spielman. Matt, I'm going to unmute you and go ahead, Matt.
Yeah, hey guys.
Hey, Matt.
Hey, so my investment club looked at Medifast in August, and I had a comment before Ken's comment. In 2017, Medifast changed, basically launched Optavia, which is what you talked about, Mark. The coach-led or individual sales-led thing. But one thing, without arguing the numbers, one thing to keep in mind too, at the same time, they've actually been winding down their namesake sort of traditional distribution model, the Medifast. And I think it was just earlier this year, I think they announced, I don't think they're quite done yet, but they're just about finish the wind down. So at the point where they've had growth since 2017, they've done that while also essentially taking down a whole division. And so rather than selling it or going cold turkey, they've been getting rid of inventory. So that's been sort of a something that's slowed down their implied growth since that time. But it is the birth of Optavia is what happened in 2017. For those that are interested in research.
Can you spell out just a little bit more about what this Octavia is? Is it a system like some of the home good systems where you spend most of your time trying to recruit other people to sell the stuff?
Well, you have to, you kind of get that taste in your mouth. You don't have to recruit to participate. It isn't directly done that, but yeah, they call them coaches, or their let's say direct salespeople. And more than sales, they also work with their end clients and goals, right? So it's someone to check in with to see what you're going on. Kind of it's not really a personal trainer because it's about nutrition, and they're not, degreed nutritionists or anything, but it's kind of like a personal trainer in the system. But yeah, it's very much like that. And if you look at Medifast, the namesake business, how it was before, it was exactly that. This is more looking for peer sales, right? Someone of your age, of your type, a very fit person to sort of look up to, and then those are the people that they work through. But yeah, kind of along those lines.
Okay, I didn't realize that it was that dramatic a change from the one model to the other model. Okay, that does explain a lot. It explains an
That
awful
does
lot.
help a lot. Yeah, it's definitely a mentoring type concept, and right down to tracking sleep and 5 or 6 key things. So that helps a lot. All right. Any other comments, Ken?
No, I think we're keeping up pretty well with questions and comments, Mark.
Okay. Well, with that, here is just a reminder that we do archive all of these sessions at YouTube. You can just search for Manifest Investing and you'll find these. If you click on video, you'll see a few hundred of these. We put all the bull sessions here, the round tables, the expected returns, reviews, and some other educational sessions. That COVID cancellation conference, which will be coming up in November, is just a continuation of what you see right here. You can check in on some of our work in the past. And we'd invite you to do that. If you go there and you like what you see and you'd like to be notified anytime we add content, I did add the Cleveland session from Saturday morning. I thought that went fairly well, Ken. So consider subscribing and we'll let you know when that type of stuff appears. I called it The Song Remains the Same. The song remains the same. Go ahead, Ken, and let people know about what we're doing in November.
Well, here we are again. This is the second year now that Better Investing's had to cancel its conference. They moved it 6 months ahead, the first cancellation, and then they moved it 6 months ahead again for the same conference. Then they've moved it to a to be determined date. Anyway, we've run COVID cancellation conferences each time the conferences had to be moved, and we're going to do that again in November. On November 10th and 11th, we're going to run a series of classes. It'll be culminated with a stock panel at 8 o'clock in the evening on November 11th. The registration will be coming out sometime in mid-October. If you're on our reminder list, you'll automatically be reminded. On the Mid-Michigan reminder list, you'll automatically be reminded, and you'll get a registration link. If you're not on the registration list, give us drop an email to my wife, nkavula1@comcast.net, or you can also register once the materials go up on Manifest Investing. And we hope to see you at one or more of the classes, and definitely at the stock panel. We have a pretty good panel pulled together this year, and we're going to leave you with some pretty good ideas, we hope, when it's all said and done. Mark?
All right, we'll go ahead and close down for the day. I had to give you a choice because the message on the right is so negative. I don't like being negative, but there is the Sabalenka racket again, reminding you about the September stock market. The picture on the left is an image from Hawaii. Our daughter is actually running around the Big Island, and that happens to be one of the waterfalls there, and I like that picture.
So that means that her 3 children are running around your home then, right, Mark?
Yeah, and Ken, I'm reaching levels of exhaustion I've not experienced in a long time.
I warned you. Okay.
I really don't know how we did it or how young people do it today, but it's a wonderful thing. But man, are we going to be tired? We've got them for the better part of 10 days.
So are you halfway through or more than that, Mark?
I'm losing track of day and night. We're about halfway through.
I'll leave it at that, okay? I want to say goodbye to everybody and thank you for coming. And Kim, thanks for being here. Mark, thanks for having me. I appreciate it.
All right, everybody, good hunting out there. Let us know if you spot a good small company. Take it easy.
Bye-bye.
Bye-bye.